There's a secret to financial freedom that most people never discover, and it's simpler than you think. It's not complicated investment strategies, crypto trading, or starting a business. It doesn't require genius-level intelligence, a six-figure salary, or perfect timing. It's a handful of basic principles that, when applied consistently for decades, guarantee financial independence. The secret is this: spend less than you earn, invest the difference automatically, avoid debt, increase your savings rate over time, and let compound interest do the heavy lifting. That's it. No tricks, no hacks, no shortcuts. But most people never implement these basics because they're chasing complex strategies while ignoring fundamentals. They're looking for the magic formula when the real formula has been proven for centuries. I'm Kyle, and today I'm breaking down the simple tips that created my financial freedom, the habits, mindsets, and systems that work regardless of income level, market conditions, or economic cycles. If you're tired of complicated advice and want straightforward principles that actually work, this is for you. Financial freedom isn't mysterious, it's methodical. Let's dive in. Here's the core concept. Financial freedom is achieved through systematic simplicity, not complexity. Most people complicate wealth building with constant strategy changes, trend chasing, and information overload. They jump from stocks to crypto to real estate to side hustles, never mastering any single approach. The wealthy do the opposite. They master boring fundamentals and repeat them forever. The foundation is cash flow management. Earn money, spend less than you earn, invest the gap automatically, and never touch it. This creates a growing pool of invested capital that compounds over time. Eventually, investment returns exceed your expenses and you're financially free. The formula is ancient and proven, but people ignore it because it's not exciting. They want the new thing, the hot tip, the secret strategy. But the secret is there is no secret. It's discipline applied to basics. Warren Buffett's wealth came from buying stocks and holding them for decades. It's boring, it's simple, and it works better than any complex strategy ever invented. The complexity is seductive, but simplicity is what builds lasting wealth. Here's why simplicity beats complexity. Complexity creates decision fatigue, paralysis, and mistakes. When you're juggling 10 investment strategies, 3 side businesses, and constant market timing attempts, you're mentally exhausted. Every decision depletes willpower, and eventually you make emotional choices that destroy wealth. Simplicity eliminates this entirely. When your strategy is invest a fixed percentage every payday into index funds and never sell, there are no decisions to make. You automate it and forget it. This removes emotion from the equation. You're not panicking during crashes or getting greedy during booms. You're just executing the same simple action repeatedly. The psychological benefit is massive. Reduced stress, clear direction, and confidence that comes from understanding exactly what you're doing. Complex strategies might sound impressive, but they're fragile. One wrong move destroys everything. Simple strategies are anti-fragile. They withstand crashes, booms, and chaos because they're built on fundamentals that never change. The people who achieve financial freedom aren't the smartest. They're the most disciplined at executing simple fundamentals consistently.
Quick pause. On this channel, we talk about money, finance, and wealth. What do you consider wealth? Let me know in the comments. Let's talk about the exact tips that work. Tip 1. Automate your savings on payday. Transfer a fixed percentage to investments before you can spend it. Tip 2. Live on less than you earn. Aim for at least 20 to 30% savings rate. Tip 3. Invest in low-cost index funds. No stock picking, no market timing, just broad market exposure. Tip 4. Avoid all consumer debt. If you can't buy it with cash, you can't afford it. Tip 5. Increase your savings rate annually. Bank every raise instead of inflating lifestyle. Tip 6. Track your net worth monthly. What gets measured gets managed.
Tip 7. Ignore market noise. No obsessive checking, no panic selling, no emotional reactions. These aren't complicated, they're brutally simple. But simplicity doesn't mean easy. It means executing basic actions consistently when everyone around you is doing the opposite. Most people know these tips, but don't follow them because they're not exciting. They want the new strategy that promises faster results. But fast results rarely last. Slow, boring, consistent execution of fundamentals creates permanent wealth that compounds over decades into financial freedom. Here's how this plays out over time. In your 20s, you're establishing the foundation. Automate savings, live modestly, avoid debt, build the habit. Your net worth might be small, but the habit is everything. By your 30s, compound interest starts becoming visible. Your investments are growing not just from contributions, but from returns on previous contributions. By your 40s, acceleration happens. Your investment returns might equal or exceed your annual contributions. This is when wealth building shifts from grinding to exponential. By your 50s, if you've maintained discipline, you're approaching or achieving financial independence. Your investments generate enough passive income to cover expenses. The timeline varies based on savings rate and income, but the pattern is universal. Slow start, visible progress, exponential finish. The key is never quitting. Most people start strong in their 20s, lose discipline in their 30s when life gets expensive, and reach their 50s with nothing. The winners maintain discipline through every decade, even when progress feels slow, because they understand that time is the multiplier. Every year of consistency compounds into future freedom. Let's address the psychological resistance. This sounds too simple. There has to be more to it. This mindset keeps people stuck in complexity addiction. They believe that if the strategy isn't complicated, it can't work. But complexity is often a disguise for ignorance. When you don't understand something, it seems complex. When you master it, it becomes simple. Financial freedom is simple because the fundamentals are simple. Spend less than you earn and invest the difference. Everything else is noise. The resistance to simplicity comes from ego. We want to believe we're sophisticated, that we've discovered advanced strategies others don't know. But the wealthiest people use the simplest strategies. They're not day trading or chasing trends. They're buying assets and holding them. The reframe is simplicity isn't weakness, it's strength. Complex strategies require constant attention, create stress, and fail frequently. Simple strategies run on autopilot, create peace, and compound reliably. If you're looking for complicated advice to feel smart, you'll stay broke. If you accept simple advice and execute it relentlessly, you'll become wealthy. The choice is yours.
Here's what happens if you reject simplicity and chase complexity. You'll spend decades jumping from strategy to strategy, never mastering any of them. You'll lose money on crypto crashes, failed businesses, bad stock picks, and market timing mistakes. You'll reach your 50s exhausted, stressed, and broke because you never built a foundation. Every strategy change resets your progress to zero. Meanwhile, people who followed simple fundamentals for decades are financially free. They didn't get rich quick. They got rich slowly and permanently. The brutal reality, complexity feels productive, but produces nothing. You're busy researching, analyzing, and strategizing, but your net worth isn't growing because you're not executing fundamentals. Action beats analysis. Simple execution beats complex planning. The people chasing complexity work forever because they're addicted to the search for the perfect strategy.
The people executing simplicity retire early because they spent decades building rather than searching. Financial freedom doesn't come from finding the secret. It comes from applying the basics everyone already knows but refuses to do. Let's compare two people over 30 years. Person A chases complexity. They start with stocks, switch to crypto, try day trading, launch a side business, invest in rental properties, then switch back to stocks. Every strategy change costs time, money, and momentum. They're constantly learning new systems, making mistakes, and starting over. After 30 years, they have scattered investments, mediocre returns, and high stress. Their net worth is modest because they never stayed committed to one approach long enough for compounding to work. Person B embraces simplicity. They automate savings, invest in index funds, and do nothing else for 30 years. No strategy changes, no trend chasing. Just boring, consistent execution. They experience the same crashes and booms as Person A, but they don't panic or react. After 30 years, their net worth is massive because every dollar invested had decades to compound without interruption. Same income, same market conditions, but Person A chased complexity and stayed broke. Person B executed simplicity and achieved financial freedom. The difference wasn't intelligence, it was commitment to fundamentals. Here's the advanced strategy. Once you've mastered the basics, don't add complexity, add intensity. Most people master the basics, then get bored and start chasing new strategies. That's the trap. Instead, increase the intensity of your simple strategy. If you're saving 20%, increase to 30%. If you're investing monthly, invest bi-weekly. If you're tracking net worth quarterly, track monthly. Amplify what already works instead of adding new things. The second advanced move, stack simple habits. Don't just automate savings, also automate bill payments, investment rebalancing, and expense tracking. Create a financial operating system that runs on autopilot, requiring minimal attention. This frees mental energy for income growth rather than financial management. The third move, optimize tax efficiency. Use retirement accounts to reduce taxable income, harvest losses strategically, and structure investments for long-term capital gains. These aren't complex strategies, they're simple optimizations of the fundamentals. The pattern, simplicity first, intensity second, optimization third. Never abandon simplicity for complexity. Double down on what works.
Let's talk about obstacles. I don't have enough income to save. If you're earning anything above poverty level, you can save something, even 5%. Start there, then increase as income grows. The habit matters more than the amount initially. I have too much debt to invest. Pay down high-interest debt first, but don't wait until you're debt-free to start investing. Split your available cash between debt payoff and investing so you're building both simultaneously. The market is too risky right now. The market is always risky, according to news headlines, but historically, long-term investing in diversified index funds has never failed over 20-plus year periods. Ignore short-term noise. I'm too old to start. If you have 10 years until retirement, you can still build substantial wealth through aggressive saving. If you have 20 years, you can achieve financial independence. It's never too late to start, but every year you delay makes it harder. The obstacles are real, but surmountable. The question isn't whether you have perfect conditions, it's whether you'll start with imperfect conditions and adjust along the way. The people who achieve financial freedom through simplicity share specific traits. They ignore trends and focus on timeless principles. They automate everything, so discipline isn't required daily. It's built into systems. They live modestly, regardless of income growth, avoiding lifestyle inflation completely. They measure progress by net worth growth, not income level or possessions. They're patient, willing to wait decades for results without needing instant gratification. They're consistent. They execute the same habits through booms, crashes, and everything in between. They're boring. Their financial life is so simple and automated that it requires almost no attention. They avoid debt completely, viewing it as wealth destruction. They prioritize freedom over status, substance over appearance.
By their 40s and 50s, they're financially independent while peers are still grinding. The difference wasn't luck, intelligence, or income. It was commitment to simple fundamentals applied relentlessly for decades. They didn't find a secret strategy. They executed the basics everyone knows but refuses to do. At the core, financial freedom comes from mastering simple fundamentals and executing them consistently for decades. There's no secret strategy, no magic formula, no hidden knowledge. It's spending less than you earn, investing the difference automatically, avoiding debt, increasing savings rate over time, and letting compound interest work. Simple, boring, proven. Most people reject this because they want complexity to feel sophisticated, or they want shortcuts to get rich quick. But complexity fails, and shortcuts disappoint. Simplicity executed relentlessly creates permanent wealth. Start today. Automate your savings if you haven't already. Set a target savings rate and increase it annually. Invest in low-cost index funds and never sell. Track your net worth monthly and commit to never abandoning these fundamentals for complex strategies. Tell me in the comments, what's one simple financial habit you'll start this week, and what complex strategy will you stop chasing? This is the path, this is the discipline, this is how you achieve financial freedom. Let's build wealth through simplicity together.
If you stayed until the end, you're clearly serious about improving your finances. Subscribe and help us reach 100K. And before you go, watch this next video. It could be exactly what you need for your financial journey.